So, what's your next trip? Where are you heading?
My next trip is to meet, it's our company meeting. We meet once a year, and it's going to be in Tbilisi,
No
which is
kidding.
Georgia. Yeah.
Yeah, no, I know. Amazing food. Amazing
Yeah.
food.
Amazing food.
Oh my God. And the nature, yeah, I
It's a
think
fascinating place.
so. Okay, so that works with your rule of I'm going somewhere that they don't speak. Oh, you don't understand the local language. Although when you started it with, it's like, oh, we're going to meet with the company. Is your company in Tbilisi or people flying in?
So we are all flying in. We have our companies in three places. US, of course, in multiple places, location in the US. Our headquarters is US, but we have two subsidiaries, one in Cyprus and one in Ireland, Dublin, Ireland. Just because we are 100% remote, we put people in these subsidiaries. And Tbilisi was a place where everybody could get to very easily. So we've gone there, and not many people know that Georgia is the place. I think I've read that Georgia is the place where wine originated. We think of France as the place that
Interesting.
wine originated, but it is fascinating to go to Georgia and drink that wine just because it is so different and it's grown and matured differently compared to the rest of the world.
Interesting. How do they do that differently?
So everywhere else in the world, if you see the US, they mature wine in steel canisters because America is fantastic with commercializing things. So we want to make lots. So we do it in steel containers. So they're much bigger and you can do it. Many other parts of the world, they do it in oak barrels, right? And they're of a certain size. But if you go to Georgia, they do it in clay pots that are underground and they put it inside that. So it's very interesting how they mature it. It's almost like in India, they make yogurt in clay pots. So this is wine made in clay pots underground.
I didn't know. I didn't know that. Okay, I know what I'm going to visit next time that I'm in Georgia. Because one of the other things, well, they have fantastic food. So
Yeah, very good food.
beside the fact that they are using fruits to fill them up with rice and meat and do all kinds of other stews which are phenomenal. It's yeah, okay. We'll check out the wine. Because sorry. Because when we think about the origin of beer, that comes, if I remember correctly, from Egypt. Back
Yep.
then it was a green beer and something that been drinking for what? 5,000, six
Yes.
thousand years. At, okay, cool, wonderful. Kabir, thank you for joining me. Let's do the official start. How about you'll tell people, the audience, a little bit about yourself and about your company?
Thank you. It's a privilege to be here and speak with you. Um, I do not consider myself an entrepreneur, and I've said this every time I speak to people because I'm not traditionally an entrepreneur. I didn't come from a school that teaches you how to start your own business. I'm originally from India, and most people would look to, at that point, would look to join large companies. So that's what I did. So I joined a multinational called Marsh and McLennan, and I was the last employee of this company when I started. They acquired the company I had joined with, so I thought I would be laid off. But I stayed there for 17 years, and it was a fantastic training ground. I had so many different roles, and you have to give credit to your early employers and mentors because I wasn't a broker, I wasn't a programmer. I just love data, and they let me play with data. So somebody who gives you a chance is the most important part of life, and that's how I grew up in this industry. And then I left to start after 17 years. I left to start a company purely by chance to say, I don't think I can do any more with Marsh. Not because I'm arrogant. I just don't think they had any more use of what I was trying to do. So I left and started a company, and people say, how did you leave this? I said, well, you have to be a little bit arrogant and a little bit naive because nobody does this to say, I'll leave a great job and I'm going to start something where I have very little chance of success, possibly as a percentage. But I was so confident that, hey, this is going to work because you're following your passion about an idea, whatever that idea may be.
Now you
And
go ahead. Sorry.
and that's how I've grown up in terms of I was given chances. Some I took, some I didn't. I was given opportunities, and I was mentored to say, "You should try this. Why not do it?" And I think it was those coincidences or opportunities that helped me make who I am today.
What was the first company that you started living Marsh?
The first company I started was called Risk Match. So the idea was of Risk Match was, can I? Now, insurance is a very big industry. It's just over $1 trillion. And my point was, most insurance in the US is disintermediated, which means a broker or agent takes the risk of a insured and places it with the insurance carrier. But there is no set process how to access that. And what I mean is a carrier goes to a broker and says, I'll take you out for lunch, dinner, golf. Can you tell me what I can write? So I was trying to can we make it easier? So that's the whole point. Because brokers don't underwrite. They bring something to a carrier and a carrier underwrites. So I was trying to say, can we not connect these two together? And I'd done something similar at Marsh. So that was the idea. And it took me a while because we all feel in our industry that, hey, every risk is unique. And I would say, only a mother can say you're unique, but we all have similar risks. Maybe the components are different, but the risks are similar. If it was unique, then every carrier would customize every product that they sell to each client. I don't think so. We are taking product off somebody's shelf, modifying it, and then selling it to cover a risk. So I don't think 80% of the risks are unique at all. Maybe 20%, maybe 10%. But let's just take the 80% and then can we connect it, make it easier for the two parties to talk to each other. So that was the concept of it. And that's why the name Risk Match.
And then?
It was a very tough sell because in our industry, data is not what is considered the driver of business. And if you think about it, relationship is what is considered the driver of business because there's no barrier to starting a broker. If you're a good agent or a good broker, you can leave and start another company and people will come. So it was very difficult to sell. So I said, how about brokers? Would you like to make more commissions from carriers? And the immediate answer was yes.
Well, you give them the financial incentive. Of course, they will jump on it.
Right. And that's what it started. And we grew quite fast. So in 3.5 years, 3.5 years, we were acquired and we were growing 250% per year. And we were acquired by Vertafore, which is a Bain Capital, at that point, Bain Capital company. And our point was, it was a very tough decision to sell because it's your baby, right? You don't want to sell. The reason to sell was like, they have 20,000 brokers. At that point, we had 36 brokers as clients. So now you can provide to more, you can do more with the same pie. And that was a proposition. And
now,
I went ahead.
Was that here in the US or still in India?
It was in the US. So I've never worked in India.
Okay.
So I came to the US in 1995 to do my master's MBA. And I started with Johnson Higgins. That became Marsh, or that was acquired by Marsh. And I stayed there, left in 2012 to start Risk Match. And then, that's my story. So I worked at Vertafore for a year. I left. I thought I was going to retire. And COVID hit. I just didn't like retirement because I like meeting people and like talking to people. And all I was doing was picking up and dropping the kids and doing honeydew lists. I'm like, well, this is not what I considered retirement. So I said, well, maybe I can go back to what I like doing.
which is apparently building companies. And
I,
second and third company means that you're a serial entrepreneur. I know that you don't like to use the word entrepreneur, however, that's basically entrepreneurship is. And you also mentioned that, well, it's your passion. It's something that comes from within. There is a vision there, right? So I'm sorry to say, but it sounds to me that you're a little bit, corrupted by the ideology of entrepreneurship and venture capital or whatever they are trying to sell in a Y Combinator and other kind of let's build the next level or next generation of our Ponzi scheme. Sorry, pyramid, venture capital money. Sorry.
yeah.
No. Well, one of my best friends is a VC. But okay, yes. So, what are you doing today?
So today we are focusing on how can we move data between systems so you don't have to rekey, re-enter, update things. That's our
Wait. Is
focus.
that company one company? Sorry, is that company two or three?
Number two.
Number two.
I haven't
Okay.
started number three, but number two.
Well, hold my beer. Yes.
So what we're trying to do is, so if you think of any, it doesn't matter if it's insurance, if you think of industries, we enter data as in our roles. If I'm an account manager, I do placement, I do advisory, and then I enter data into a system to record it. Then a producer enters data into a completely separate system called a CRM or whatever it is, and we enter it over there. And the third person does it in a placement system, and then it's separate. So while these technologies are separate, what has happened in, especially in insurances, the data is not wrong, is just not at the point where it is synchronized across all these, which means it was, depending on when I entered the data, it is right at that point. And when it's moved on, it's never synchronized across. So where you get is partial truths everywhere. And it's also three different people or three different roles typed it from their perspective, and it's not all together. So what we are trying to do is, can I synthesize that and make it easily move between systems so you get whatever you see at this point of time and the whole history behind, rather than doing it across different people.
And for there, you took the name, which we actually should have started with. Tell me more about Enable, or is that the way? Is that the right way
That's
to
right.
pronounce
Yeah.
it? Enable, right?
Enable.
Because
Yeah.
the misspell is, again,
Unintention.
unintentional.
I
How? Yeah. How come?
so I wanted to. So the idea, and I always say, you should have the principle before you name a company. What is your guiding principle? Our guiding principle is, can I enable whatever you're doing to do it faster, cheaper, easier? Let's start with that. So I wanted to name the company Enable, like enabling people, enabling companies. However, I could not find the name. I could not buy the name Enable because it is now owned by this coupon company. And I'm like, well, I need to find something. So I said, I'm going to make it an Indian spelling. And I can say, because I'm Indian, let's change it up slightly a little bit. And I got the name Enable. People might call it Enable because if you ask Google to give the name and you ask it to pronounce it, it'll say Enable. But we said, oh, we're going to keep doing this and convince people it is still Enable. So that's how the company's name came about, to say, how can I help you do whatever you're doing better, faster, easier?
It's all about enabling insurance brokers.
That is it. Very well said.
When did you start the company?
We started the company January 2021. So just about
Mid
3.5
COVID.
years. Yeah, just recent, right after, because I got bored in COVID and I'm like, I need to do something to focus. I was drinking too much wine. I'm like, I need to stop and I need to focus somewhere my efforts. So 2021.
And the main value proposition is, well, you said enabling, but how do you enable is basically sync all the different systems for the broker. So you don't have half truths. There is not a source of truth, but you actually clean the data, restructure it, What's the process there? Do you have also some
Correct.
sort of a automation, or is it
Yeah.
just data cleaning and normalization?
So it is two parts. One is we clean what has been there, but we also say there are certain things we shouldn't be asking people to do, which is tell me the address of this company, tell me the number of the demographics of what describes the company, because that is easily available. So part of the role that we are assuming with brokers is what you can buy, don't ask people for it. Because the more you ask people, the more mistakes you have to correct or more data you have to maintain. This can be purchased. So we are saying certain parts should not be asked of manual input. So that's one. The second part of it is, well, if you have all of this data, what is the use of it? Data, if you don't use it for a goal, becomes a trend, becomes a statistic, and that's where it is. When what we are saying is, if you can use your data to, can I make more money from a carrier? Can I suggest more things to a client? Can I have my people do less work and do more interpretation? So those are the three avenues of using data that we are involved in with brokers.
Who is your customer? Because you mentioned the carriers. It sounds that the technology or the product is aimed towards the brokers, maybe the agents as well. But you say that the carrier pays you more. So who is the paying customer?
At this point, we do not sell to carriers at all. Zero. That was the first company.
So you're
Well,
going broker by broker or
yes.
wholesalers?
We have 70 clients who are agents and brokers, 70 different, not individuals, companies. Our smallest is $3 million in revenue. Our largest is $4 billion in revenue.
Yeah.
Essentially, which is not bad, which is tiny compared to a lot of the large companies, just a little bit. But there are 34,000 agents and brokers. So we are pretty small compared to where we want to be. So we only sell to brokers, and brokers have introduced us to wholesalers because they're like, hey, I want to do more business with these wholesalers. So can we do business with wholesalers? And it's the same data. So the good part is what flows from an insured to a broker flows to a wholesaler, flows to a carrier. So it's like saying, hey, if I cook food, here's a recipe. Whether you cook it, somebody else cook it, you might modify the recipe a little bit with your own touch, but ingredients are the same thing. How long you cook it, how you serve it is slightly different. So that's what we're doing to say we'll go from a broker. That is our only customer and our primary focus.
And how do
Broker and
they
agent.
broker and agent? And well, brokerages, agencies, because well, the end user will be the producer or the broker himself within that. Now, how big of a difference it is for a small brokerage? You said I think it was what 3 million or 30 million written
3 million.
premium, three
Yeah.
million, which is I don't know a brokerage of two maybe, versus a 4 billion brokerage in terms of
Yeah.
the data that they use, how it disseminate within the company, and the different challenges that they have, especially with automation and automation at scale.
I can tell you from my experience today that the smaller brokers have more automation and cleaner data than bigger.
Oh, I'm
And that
sure
is
that they
surprising
do
to
in
me.
terms of clean, because
Yeah.
once the yeah, for many years people try to understand, oh, I just need to scale up my organization, right? So we just add another person, etc. And I think it was maybe the Greek army back in the day that discovered that you need a leader can lead up to three or no, was it four people that they will follow? So that was kind of the structure. So one person you can basically manage eight, but when it comes to larger scales, there can be a maximum of four other managers that can report directly to you, which is it's not that flat organization, but the same thing happens with data, but more about how corrupted or you have more noise in that data than you wish that you'll have.
Yeah. There are two reasons. So I totally agree with you. But there are two reasons why larger corporations have more problems. Primarily is because historically they have grown by buying companies and not putting it together to say, here's what I want to do with data. So if you buy them and say, yeah, you can do exactly what you're doing, I just need the NOI, I need the margin, and that's what happens. So that's why there's a huge backlog in these large companies of trying to use data. I'll give you an example. You know, the top 3 to top 5 companies in the US for brokers spend an enormous amounts of money trying to put it together.
Yeah.
And how do you use it with the carrier? How do you use it for AI? But after that, number 5 downwards, they're just starting on that process because it was expensive to do it. Right? And when I say expensive, hundreds of millions of dollars. But with technology becoming cheaper and cheaper and cheaper, you can do it. You can share it as a community and do it much cheaper today. And that's why they're starting. They have reached a certain size where you have to do it. And now your backlog is too high. In terms of smaller ones, it's also just the number of people. So our smallest client has, I think, 25 people. The roles are very defined. They don't add one more body unless there's a net upswing that is much higher, because they don't have any time or money to waste on a person and on, because they're more very collegiate with each other, not like middle-level managers, the next level of managers and PMP program managers. They don't have that. So the sophistication may not be there, but it also helps them keep the processes very simple, which is focused on, can I deliver this faster to a client, better to a client?
The incentive is different. The collegiancy is different. You
Yeah,
care that your colleague can receive the best. But then we add the not human element of it within the process, within that kata, that you make sure that it's a closed world. It's not an open world.
right.
It's very annoying because it limits it, because it's a certain lexicon with an n number of different words and description or whatever the values that you can enter into that process. And that will be your limit in terms of creativity. But that's a different. Well, you don't need too much creativity there, but you do need it. But that will be a different conversation, which kind of a segue to for insurance from what you have seen, and you kind of hinted about it earlier. Is it a data problem or is it a human problem?
Excellent question. I think it is giving humans the wrong thing to do is the problem.
Okay. Let me bring out.
So, and what I mean by that is, look, here's a product and you're selling it to somebody. My point is you're maximizing a person's use in doing the wrong thing rather than interpreting it and saying, this is how you should use the product. So it's like saying, if you go to a car dealership, I'm going to put all of these producers in a car dealership to fill in 85 forms. Well, he or she is not going to like selling a car because he has to fill in 85 forms. And what happens in insurance is you do it first time, you never do it again because you're like, I don't want to fill up 85 forms again. Because you've now just created a disincentive for the objective of satisfying, I need this data. And if you were to do this over and over again, you're going to cut costs in terms of, I'm not going to do right by the client or right by the market or right by the carrier. I'm just going to do right by the process. And that is a major hurdle where we have saddled people with things that they shouldn't be doing.
I'm
Like
not
it's
sure.
like saying, what I mean, like if you say, hey, I want to rates change insurance, just like airline pricing, coverage changes, So every 1 year, 2 years, 3 years, like take commercial insurance, you're going to look at the market. But if you have to look at the market, which means you have to fill in 85 different forms and go to each market separately. would you do that if you knew I can just renew with the same carrier by just saying, just renew? So, and that's what I'm saying. We have created that friction unnecessarily.
Well, the biggest problem, or I would say the biggest feedback that we keep hearing over and over and over again from everyone in the industry, especially commercial insurance in the US, it's renewals, right?
Yep.
Every year it comes, you know that it's going to take a few months. Most likely it's more about digging and running after updates and refresh. Do you have new information? Anything changed? Was there a change to the risk? Then applying to the existing carrier and hoping that they will renew it. And sometimes, because a change in the risk appetite, they do not renew. And then you are running quickly and trying to renew because you have it once a year, every time.
Yeah.
And then go ahead.
No, you're absolutely right. And part of it is the quirk of this industry, which I don't understand. It's like saying, I bought a BMW and I go back to have service to BMW. They're like, well, we don't service this model again. I'm like, why? I bought it from you. Oh, no. We stopped doing it. Maybe come back next year.
Yeah.
Like, who
Come
does
back.
that, right? So my point is, we have created a process in this industry, and that is created by the carriers. So I'm not trying to blame the carriers. I'm just saying this is the uniqueness or quirkiness of this industry.
Indeed.
Why can't you monitor it, or ask for, here's what is needed, and you say, oh, I have too many losses over here, I won't do it. Well, sometimes you have to take a loss some year, and sometimes it's going well. You're not giving me the money back when you make a profit, so why do you cut it off when you don't make a profit? So you see, we are not consistent as an industry to give this overall to the user.
Needless to say, it doesn't work this way because at the end of the day, an insurance company is a for-profit organization. The regulators, right? The regulators will have their various tools, kind of make sure that there is a wide net of safety and economic safety in their state, but the carrier goes like, yeah, no, I have a bad risk. Now, needless to say, the majority, unless they are regional, they don't know business by business. They go, we need to cut this risk, remove the exposure by 5%, 10%, 2%, 100%, whatever that may be, get rid of the book, or in that case, or that they will not renew it, or if it's a different type of risk, maybe they will sell that book of business. And then, as you said, 3 years later, California homeowners insurance, that can be actually attractive again. But, everything changes all the time because at the end of the day, it's risk management and how you can quote it and put a price on it and make sure that you have your own reinsurance or different safety nets and distribute it, within everyone. So, kind of make sure that there is a backup plan B for the plan B for the backup and share it among everyone. And at the end of the day, our pension funds or our 401ks, if we know it or not, are actually covering the insurance policies for everyone else.
You're absolutely right.
Let's go. Sorry, go ahead.
No, go ahead.
No, I was about to ask you more about data and diving a little bit more into the product itself and how the brokers use it, what's the feedback and use cases that you've been using. But we can continue to talk about all the insurance industry mechanism or just about philosophy and entrepreneurship.
Well, it's both those things. I'll give you an example. I always say philosophy drives whatever you're doing. And my point is sometimes it's good to question whatever our sacred cows are. Like, why is the policy in life insurance? The policy doesn't change. In benefits, it changes every 12 months, November, December. And in commercial, some policies are continuous. But in others, they change every 1 year. But there are some policies which are 3 years. So my point is, look, it's not like, well, you have to assess it every year because it's been shown. I'm not saying don't assess. I'm just saying part of it is a regulator's problem, part of it is a carrier problem, and part of it is also a broker problem because we have not created a trusting ecosystem across all three areas. And this is philosophical. We can't change it. You can only do certain things. But that's what has created, whether it's regulators in California or carriers who want to pull out, everybody wants to make profit. So the question is how much and where. I just think certain sacred cows should be questioned.
Yes, I agree with you. You need to revisit it, not too much. There are people who, you talked about disruption at the beginning, and it was the relationship between the broker to the carrier going playing golf, or the carrier and MGA to the reinsurance, much more golf and having lunch, and it's the relationship. It really depends on the person that I'm talking with. He will put data as the secret source and relationship as the other or the main driver of the insurance industry, of what's behind the scenes. And great, I started with that and completely lost my line of thought here. But you were sorry, you were talking about data, and no, I'm still completely lost my line of thought because I went on
No,
that direction.
no, if you're talking of data, right? So if you think about it, we are saying
Oh no, sorry, I was talking about disruption because,
disruption.
and yes, sorry, you were bringing that example, and then there is a question of what is the disruption if you automate that relationship and the data to take the decision which will replace, basically data that will replace the relationship.
Yeah.
Because if you have a risk, you can match it. You can basically create like the stock exchange, right? But for risk and insurance, you can automate it. People can just type in what they need, and AI or something else go like, yep, I want this risk. You'll have quants that basically will know how to match the best insurance, who buys, who sells. You can bid. Later on, someone will file it with the SEC and create his own derivatives based on that, or based on different ILSs that they bunch together a few policies or whatever that may be, right?
So,
Yeah, sorry, go ahead, because I'm already starting
so,
to build here a new industry.
so I'll tell you, it's not about disruption at all. I'm just saying change the process. And what I mean by that is certain things should be automated. And it's not like we don't use that today. You think if a broker says, Kabir, I'll go to, or Gilad comes to Kabir as a broker and says, here's my risk, that he's going to say, let me see, I know him well, I'll say yes or no. He's always going to use data to give you a price back. So what makes us think that they're not doing this already?
Of course they do.
That's how all systems work. So I'm like, so we are fooling ourselves by saying, well, he knows me better, so he's going to give me a better deal, maybe by a little bit, but not by much. So my point is, it is already being done that way. So why don't we make certain commoditized products? And I'm not saying complex risk, commoditized products, completely seamless. It's good for the insured, it's good for the broker, it's good for the carrier. So let's create a stock exchange for commoditized products, which is insurance. Because a carrier is anyway using data science and all the questions you have answered to give you a price back. It's not like they are not using data to price the risk. They are. And what they're saying is, oh, Kabir gave me this thing. I can't trust it. So I'm going to go and buy data on whatever risk he got to validate it and then get back to you. So I'm like, well, it is foolish of us to say we shouldn't automate that process. And that, I think, is saying, oh, that's a sacred cow we need to look at. So that's one. Second, my point is, well, if you're going to a carrier as an institution, well, give the carrier access to all the smaller ones or whatever commoditized product. Why are you waiting to say, let me get it, think about it when I have to do it, and then go to 3, 4, 5? Why are we waiting for that? Let's get ahead of the process. So I'm just saying, change the sequencing of things, and it's not disruption. It's the same process. You're just changing the sequence of when you do it, because it's better for you, cheaper for you, and good for the client. You'll get the same amount of money whether you come to me in person or you send me this over an API. So why are we doing this thing? That's the point I'm trying to make. So certain things I think should be automated. Absolutely.
Oh, listen, I don't mind. On the contrary, I'm all forward for looking into holy cows and re-examining them, and that's part of it. Relationship and making business based on relationship. That's a holy cow that you need to look at. Does it
Yeah.
work? When can we maybe only touch, maybe just revisit the calf, not the entire
Yeah.
cow, the entrecote
So
cut.
can I use
That's most
another
definitely.
example?
Oh, please.
So think of public companies. Public companies say, here are my financials, and analysts will look at the financials and say, here's what the stock price should be, or here's what I give the, whatever the target price is. And then they'll listen to the management team talk about different things they're doing or whatever the things. They give a little bit color on the thing. Then they adjust it. So I'm like, well, so part of it is like you already get a formatted financial statement or projection, and then you can interpret it and adjust the price. We should do the same. You can adjust the price accordingly. You can automatically send it to whatever exchange or whatever you think of. When you get the price back, you can say, hey, I don't think you should think of it this way. These are the things that company is doing, and either lower the price or increase the price, whatever it is.
Wait,
But
wait,
not
wait,
everything has to be.
wait, wait, wait. Maybe I'm confused because uh, it sort of exists unless I misunderstand you. Because insurance companies need to file. They are responsible for their financial. They are responsible for their insurance. They need to submit it with. They have a lot of regulators that they need to follow. And they need to
So
be compliant with all. So maybe I'm missing a little bit with the
sorry.
adjusting of the
So
price there. Sorry.
no, what I mean is not what the insurance companies do with the regulators. I'm
Okay.
saying when a broker comes and says,
Okay.
I need to send an email. So that process that we are saying is manually done, need not be done. Because if you want the insurance price to adjust your insurance carrier to adjust your pricing,
Yeah.
the automation of it can be done. When a price comes back, you can say, hey, I think the price is high because of X, Y, and Z reasons, and you can change the price. Just like an analyst looks at the financial
I see.
statement and comes up with the price based on what management is saying about the future and the pipeline and what they're doing. So I'm like, can we not adjust it to something that already exists in many other industries?
So
Why can't we do it in our own industry?
Kabir, are we already planning our next startup here? What's going on? No, because I just want to know if it's like a few folks who are listening now already starting to figure out what they do on what are we now?
Yeah,
Chat GPT 4, 5,
4.5.
4.5, 5 or 5.7 or whatever the next one will be and go like, yeah,
I
you
hope it
know.
happens.
Oh no, it's yeah. First of all, you will need to write your own platform for that, and a little bit more on the quant element. But yeah, no, it will need to have on the biggest. Great. Now we are in brainstorming new ideas and new startups here. Cool. It will need to have on a larger scale the benefit that it will bring you more return premium, although you will adjust it also downwards. So on average or moving average, you will need to be on the green or at least not lose. So really depends if you're following a moving average of short term, mid term, and long term. Yeah, okay. One second.
Bless you.
Thank you very much. Let me.
I think this is going to happen irrespective of whether brokers or carriers want it. It is absolutely going to happen.
We talked about underwriting, pricing. Do you guys do anything in the claim space?
We're just starting in the claim space. where we are automating or digitizing. And that's another thing. So if you look at claims today, it is scary how far back we are in insurance, where every time you renew your policy or give a new policy to be underwritten, you have to give losses. All the losses that come from a carrier come as a PDF. So one of the things an account manager does is take the PDF and type it into Excel and then sends it. And you can imagine the number of mistakes that happen. Now, there are companies that do that. There are lots of companies that do, and they're very good at
And it's a full
digitizing that
industry.
information.
It's a full
Right.
industry,
Yeah.
TPAs and all the different adjusters and the public
Yep.
it's
Yep.
a multi-billion-dollar industry.
Yes.
And by the way, this is how I have my solution for gun control, but we can talk about it offline.
But so what we have started is digitizing those things for two reasons. One is you need to know one is where do you place it? And it's very important where you place it, because if you think about it, if I know I have a prospect that comes in, it's a restaurant and they also have a truck. Well, and this is just an example. If a restaurant with the trucks and I have 1,000 of these, not from you, maybe from other brokers, hey, this is going to be a high risk, high loss thing because they have a truck, not because they have a restaurant. So my suggestion is don't place it with a carrier where your contingent commissions are very high. Because in smaller brokers, the contingents are about 5 to 10% of their profit. So you need to find a carrier that's different. Just not because it's a heavy loss, but you're not going to get a contingent. Because there are three things that impact your contingents, right? One is how much new business did you give? What's your retention with the carrier? And thirdly, what are your losses? You can only control the first two. You can't control the third one. So be very diligent on how you place. The second part is, can we not all learn from each other to say, I like to write lots of high loss business, and this is who I place with because they charge you more and it's a good product. Why can't we learn from each other? It's not secretive. And that's the part I think as an industry we haven't done enough. We are all closed economies in little islands everywhere with no connections. So my point is, I think we should learn because it's good for us as an industry, good for us as a company, and good for your client.
Cool. Okay. Sadly, we are starting to run out of time. So let me ask you the last question that I'm asking everyone. Can you give the audience a word of advice, something that you would advise yourself as you entered the insurance industry? Or actually, no, that's been a while and you jumped into to marsh in a way. Maybe an insight that you learned from your experience as you started your first company.
Okay. I did not follow, and this is my experience, I did not follow my passion because my passion was to travel, write about experiences. If I had followed, I would have no money, absolutely no money. Whatever I was doing, I learned to make it my passion. I learned to love it. So it's almost like saying, it's good to have that arranged marriage of not knowing and learning to adapt to what you are getting into and loving it rather than following what you love and becoming disappointed in, hey, if I was a travel writer, maybe I would have been the best travel writer, but I wouldn't have been able to influence much. So that's my philosophy is like, learn to love whatever you're doing. Because if you love it, you're going to do more and more of it, and you're going to learn a lot from it, and people are going to also listen to you.
I love it. Yeah, learn to find not bliss, but small shards of happiness and interest
Yeah.
in any task that you do.
Yeah.
Doesn't matter what it is, but find the passion. Because hey, when you started with the passion, it's like, he's still drinking that Kool-Aid, that startup Kool-Aid. But that's what I love about working here in the industry. I see more and more business people, company owners, was, yes, I'm building a new business. I'm not launching a new cool startup, which to the startups who are listening, be that. Don't
Yeah.
don't not do that, but get things with a little bit of a grain of salt and reduce all
Yep.
the Silicon Valley Y Combinator noise kind of a thing. There are brilliant people there. Most definitely, many of them are successful. I don't know what's the ratio of the success, and that's a different type of a network. So you have that network effect as well. But the most important part is, especially when it comes to insurance, you need to be very grounded and connected to reality. It's not, although nowadays I'm dealing with late stage investments as an investment banker and M&As and stuff like that. I still, because of my network, I see a lot of early stage decks and pitch decks that, sell you everything. There is so much noise. And just the
Yep.
other day, my comment was and I reviewed them. It takes me a week or 2 weeks later, but I receive it and send back usually with a little bit of feedback or an introduction to someone that can help them a little bit more. I would say that most of the time my feedback will be remove 80% of the noise that you have on your deck or label it correctly. Is that a deck or a presentation that is behind you when you talk? So you can talk about the different numbers. Is that marketing? Is that for an investor? Because as an investment banker, I will give you a few disclaimers here and point you to different regulation because now you are an issuer and there are things that you need to be careful about what you say and not say, although there are all kinds of exemptions because they are an officer of an issuer. So they will be safe. There are a lot of safe
Yeah.
harbors.
You know,
Yeah, please. But
Gilad,
my bottom line here is that um, you need to reach the point. What's a problem? What's a solution? And this is the business opportunity.
yep.
Yes, Kabir.
So most people, when they do startup, they say, hey, this is the $10 billion opportunity or 100 billion or a trillion, whatever it is. And I think that's the worst way to start a business.
Indeed.
My suggestion is take the $10 million opportunity and just solve that one problem, because that will lead you to the next $10 million and the next 100 million and then a billion. And when we raised money, we said, we are never going to be a $1 billion or Facebook company. We're not that. Let's just be honest. We are just insurance folks who want to start a company to solve a problem. We might be 5 million, 10 million, 20 million, 100 million, but we'll never be a billion. This is not like completely saying, but there's some VCs will say, that's not for us. I'm like, totally got it. You should find that on Facebook for you. We are not the company for that. So let's just be honest and say, I'm just going to focus on a small problem. And if I solve that problem, then it leads to the next connected problem and the next connected problem. We didn't start this company to solve everything. But as we learn about one problem, we're like, oh, this is the next problem to solve and the next problem to solve.
I completely agree. And here is another thing that I need to plug in. So, InsurTech Connect Vegas coming up in October, and one of the panels, or kind of a meetup, roundtable, I still don't know what the format is going to be. We're going to talk about company valuation, mainly for startups and the insurance agents. So the first day of this ITC is going to be the Agency Connect. And one of the things is all about, are you ready to sell your company, your agency? How do you value an agency and prepare for the exit, or in this case, acquisition? If it's going to be a bigger agency, brokerage, or it's just sell it to a private equity. And same goes with the startup. And there is a big difference if you are a tech startup or digital agency or an MGA. Different ways to value all kinds of different stories. And needless to say, contact me, shoot me an email, drop me a line on LinkedIn. Let's talk. I would love to hear the audience experience, if they sold, if they are planning to sell, how the process was for them. And of course, always, if there is someone from the buyer side, that as well. So Kabir, If you also know people who sold the brokerage, startups like yourself, but from the technology side, more than happy to have that conversation with you on that as well.
Happy to do that, and I'll send people your way, because especially on the broker side, I think this is the best time to sell. It's not gone down. The smaller ones, not the larger ones. This is the best time to sell.
Oh, that, and you have the clustering, and you have the gorilla, and all the different other solutions that they are trying to figure out how they can leverage that relationship with the carrier and get a few more percentage on the premium. Okay, wonderful. We try to finish this in 30 minutes. Needless to say that we are at minute 50, more or less. Most likely I will cut myself, so it will be a little bit less. But Kabir, it was an honor and a pleasure chatting with you. I'm sure that later on we can talk more about the different travels that we do and where we go and where we want to travel to. And thank you again, and shout out to Darren who made this connection.
Thank you very much. It's been a privilege.
My pleasure.
Have a great day.
Cheers.